Hello everyone, I'm Sudhan and I'm part of the advisory team here at Providend. Today we have a very special guest, Dr. Peng Chen, who's a senior advisor and director of Providend, advising the firm on strategic matters and strengthening Providend's investment advisory. For those who may not know, Dr. Peng is the co-inventor of the Peng Chen model, which helps us derive the planning returns used to construct our clients' wealth plans. Welcome to the interview, Dr. Peng.
Hello, Stan.
It's nice to have you here. We want to thank you for partnering with us on this client-only risk coaching event. Given the current market volatility, this special interview is part of our ongoing commitment to support our clients with timely, relevant insights, helping them navigate uncertainty with clarity and confidence, while staying on track to reach their non-negotiable life goals, or ikigai goals as we call it, with the highest probability of success. So before we start, Dr. Peng, where are you currently located at?
I'm in Shenzhen, China. Actually, I'm doing a few client visits for Morningstar China. As you may know, I've worked at Morningstar for a long time, and after I retired, Morningstar, quote unquote, hired me back to be an advisor to help them with a few things, and China business is one of them. So I come to China from time to time, do a few things for them. And this week I'm in Shenzhen, helping them, setting up a few client meetings, prepare for their annual client event and so forth.
Okay. I mean, this is just very timely because the topic we're talking about is it's kind of the trade tensions, and I mean China is kind of caught in the middle as well. So how's the situation over there?
Well, I think most people are initially was as with the market was shocked by the not only the level of tariffs that's being put up by President Trump and the administration, but also the breadth, right? How many countries and so on and so forth. And so there was an initial shock, and then I think because President Trump has been talking about tariffs for so long and so many times, so people had certain level of preparation. After the initial shock, the Chinese government responded fairly quickly. I'm not saying it's a good or bad, but they responded, and the market had experienced some very high volatility last week. And then things started to quiet down, and people are assessing what's going to happen with their particular business, particular job, or in terms of what we worry most about is their wealth plans and so forth.
Okay, but going on a broader scale, it's not only China is affected. I mean, many other countries are affected as well, and
Exactly.
yeah, and a lot of leaders are also saying that it actually marks a turning point in global affairs. So do we still have faith in the markets, and is our way of investing still the right approach for the long term?
I think so. I mean, this is reminded me, how do I say it? This sudden increase of tariffs, even though people are prepared, like I said, by judging from the market reaction, people were not as prepared in terms of how big the increase are, and also in terms of how many countries were impacted. To your point, many people call it a turning point, even though the conversation has been happening for the past few years. Um, in terms of what we look at, following market, what we would want to look at is the market still a good mechanism to digest this information that's coming out, and does market price still reflect this information? And if we judge from that angle, we think the financial market worked fairly well when Trump first enacted. You saw market immediately took a beating, right? And then subsequently, he make changes or revisions in terms of exempting certain countries, put it on hold for 90 days, and so on and so forth. And you can see each step the way the market reacted very fast, and so to that extent, markets do reflect information very efficiently, and market price do reflect the collective wisdom of all the market participants. So from that aspect, even though this is something nobody like to see, I use the analogy, it's kind of like COVID, right? Something happened pretty rapidly. Nobody expected that or didn't expect to the degree it's happening. And so you see market quickly adjust based on the collective wisdom of all the participants. And that's what you see here as well. So financial markets do function fairly well, even though, nobody liked the increased volatility, particularly it's on the downside. But going back to your question, I think the market functioned fairly well here.
Yep. So a natural question a lot of investors have in mind is also, should we sell now and then come back later? Like sell now to cut losses.
Well, here's the thing, I think I was very careful to use the term, volatility has increased. And so the volatility increased both on the upside as well as the downside. So certainly when it happened on the downside, it's very uncomfortable. You're losing money and the degree you probably haven't experienced in recent years. However, this is not the time to make a snap decision because we know the situation is quite dynamic. Just look at how many times the policy has been updated from the US as well as the response from China and many other countries, right? How quickly things has changed. So, as an investor, if we're trying to in terms of trying to sell at the market top or catch the market bottom, try to, market time to a certain degree. This is probably the worst period to do it because the likelihood you're going to get it right is very, very small. And likely you're going to be caught up in one of these changes and you end up regret in a few hours actually.
Yeah, I mean there are a lot of studies showing that market timing doesn't work, and a very recent example, I mean just prior to this was COVID. Even
Yes.
during the March, the market bottom in March 2020, but even amidst global pandemic, lockdowns and everything, the market just rallied, and then people were talking about is this going to be a dead cat bounce? All these terms coming up, but the market rallied all the way and never looked back until two plus years later. Similar situation in global financial crisis in March as well. In that year, it bottomed out, and then people talking about green shoots. Is this a green shoot and things like that? But just market just rarely beyond that. So all these recent examples show that market timing is really tough, right?
Yeah, market timing is really tough. And also when there's event like this, normally, investor gets spooked and we get a little bit nervous, but we can excuse me, but we have to remind ourselves the global economy is fairly resilient. The market is fairly resilient. And what it boiled down to is that, human beings, we are somewhat resilient. We find ways to find new equilibrium, find new ways to add value, find new ways to work with each other, and so on and so forth. Now, with COVID or with this high tariff, it became more difficult. But give the market some time, give people some time, we'll find ways to adjust. Now, I'm not saying there's no negative effect at all. There will be, particularly for certain companies, or if you work for a company or your business is getting caught in the middle of this. For example, I have some relatives that are in the Christmas light exporting business. So they manufacture Christmas lights, they export to US, Europe, and many other countries. Now, going forward, exporting Christmas light, which is a very low margin business, to US amid a 100% plus tariff is going to be very, very difficult. So they're going to be severely impacted. But many others will find new ways to continue to build on their business, grow their business, apply their skills, and so on and so forth.
Yep. So with so many conflicting commentary going on around the Trump tariffs, I mean, a lot of news as well, from both from the government and as well as the media. So how can advisors help clients to separate signal from noise?
Well, I think again, you need to recognize the first thing we just talked about, that in the short term, there's a lot of news, a lot of changes, rapid changes, as we have seen, and this often happens in the early cycle of something that disruptive, like a COVID. Every day there's a new spread, new, and this is like the tariff is the same thing because there's so many players and stakeholders. They're seeing different people's reaction. How do they apply? How the market reply? How the consumer, reply? How's the inflation going? For example, if you look at what made Trump and the administration to hold the reciprocal tariff for 90 days, it wasn't because of inflation, where everybody was talking about. It was actually something happened on the bond market. People were selling U.S. Treasuries and caused long end bond yield to go up significantly, and really didn't help the treasury refinancing, because each year a certain amount of treasury come to maturity. U.S. government need to sell more treasury to finance the old debt and so forth with the new. And so something happened there. It triggered Trump and so forth to reevaluate the situation. So the things are really fluid, and it's very hard to judge what's going to happen. So the first thing is to don't make any short or quick decision. Think that you can catch the bottom or sell at the top. Like I said, that's probably the worst decision you're ever going to make. The other thing why I'm very against of the short-term decision is that in the short term, when you're making these decisions, the transaction cost is going to be very high. So, for example, you panicked, you want to sell. Many people are trying to sell. So you end up getting a very bad price. It's like everybody rushing to the exit and nobody can get out, right? So at this period, like I said, evaluate the whole picture, evaluate your wealth picture, evaluate your business picture, and then make certain adjustment if it's necessary. But don't make a decision just because the market dropped 10% or 8% that you have to make a decision, because likelihood that these things are going to bounce back and forth, and you're going to, if you make short, very snap decision, you're going to get caught in the middle, and not only making a bad decision, but end up paying a much higher transaction cost. I'm not just talking about commissions or pure transaction costs, but I'm talking about the phenomenal everybody rushing to the exit.
Yeah, great point you mentioned, Dr. Peng. I mean, not only looking at their changes to their doing something for the investments, but also looking at the bigger picture. I mean, their own wealth, own financial plans.
Exactly.
Yeah, no, don't go into certain decisions that you can actually afford to put off later, like big purchase decisions and things like that. Is that what you're trying to say as well?
Yeah, so I think the thing is that you got to evaluate the whole thing and look at your wealth. And I tend to use the analogy, it's called the asset liability, your balance sheet. Basically, how's your asset being impacted? And then on the other side, how's liability being impacted? If you're, concerned about market dropping and your assets dropping, then the right way to think about is maybe look at your liability and say, okay, like you mentioned, maybe I postpone some of my purchasing decisions or lower the amount I'm going to do, right? So, for example, if I need to, buy a car, maybe I lower the budget for that car or delay that for a little bit. So, give me some room, more flexibility to assess the situation, see what ultimately that impact me, because these are the things we can adjust, and these are the things we can bring more room, more flexibility to our plan, and ultimately that's what help us overcome these market interruptions, these uncertainties in a short period of time, not because we can get ahead of the market knowing when to buy and when to sell.
Yep, I think that's a very good point. I mean, looking at things that we control, there's this sphere of control, right? We can control certain things, but the certain things, many things we can't control. What the market is doing, we can't control. What the government is doing, we can't control. But we can control,
What Trump is going to do, what Chinese government we cannot control. You're exactly right.
yeah. But what we can control is our emotions, our decisions in terms of our
Yeah.
financial plans and things like that.
Yes, yes. And knowing that in the short term, there's going to be a lot of changes, there's a lot of back and forth. And so until it get to some sort of equilibrium where we can assess and so forth, in the short term, you're going to caught up in this, up and down, up and down. And one day you're going to feel pretty good, and a few hours later you're going to feel, okay, terrible. What did I do? Why did I sell my security, went to cash, right? And that happens a lot. And then the most recent, is that Trump is exempting I, cell phones, smartphones, computers, all of these things. And if you calculate it, that's count China alone, about 22% of China's export to the US. So you see, all of these are dynamic. And so don't make these super fast decisions, but look at your big picture, making some necessary adjustments. Make sure that you have enough flexibility to endure this short-term volatility and endure any potential emergency that may come out of this.
Yeah, there's with so many moving parts, those are things that we can't control. But one thing actually we can control, it's what we put into our portfolio. So here at
Yes.
Providend, we are very big on diversification. So how is diversification helping us at this current juncture?
Well, this is probably the only two. It's kind of a boring topic because every time we bring up diversification, but why we bring up, even though people have heard so many times, is because that's pretty much the only effective tool in this when you are combating with uncertainty and so forth. So to have a well-positioned, well-diversified portfolio along different dimensions that really help to protect your portfolio in this period. Now, it may not be able to 100% protect it because we know that a portfolio without risk is often a portfolio without extra returns. Risk and return come hand in hand. So you need to take some risk, but at the same time, we need to be very smart about these risks and diversify them with assets are somewhat uncorrelated. So, for example, we know that U.S. and China are somewhat, pushing each other, and we don't know who is going to win out. We don't know who is going to be the ultimate beneficiary, but it'd be prudent it wouldn't be prudent if we just invest in one country, right? So the prudent way to think about it is how do we diversify properly, invest some in US, some in China, some in Europe, some in Japan, some in ASEAN, emerging market, so that no matter who wins, we are properly diversified, and no matter who lose, we don't lose with one single country. So that's kind of the idea we're talking about. And that's just geographically with different economies, right, in this uncertainty. But also, if you look across different asset classes, we not only have equities, but also have fixed income, which often tends to be a strong stabilizer when equity market drops. And we not only have longer term fixed income, we also have short term fixed income. We have fixed income from different countries. And so these are ways that, from a professional investor's perspective, as well as from Provident perspective, we try to find good diversification, effective way, efficient way, cost efficient way to diversify the portfolio to help client, going through this difficult period.
Okay, thanks for your insights, Dr. Peng. So you came up with the Ibbotson churn model, which actually helps us, as I said earlier, to derive the planning returns for our clients. So, no, given the current climate and like,
Yes.
when do we, in your opinion, decide, these planning returns, we need to tweak it, we need to change, and things are changing really in the world. So
Yes.
yeah.
So these rates are is derived to help client get a reasonable estimate of what the future returns will look like, particularly on the equity side, because equity tend to be more volatile, and to have that a reasonable expected return to help doing planning and all of these. Um, in terms of, there's always going to be market uncertainty. There's always going to be these volatility, no matter which period you're looking at. And this is why it's more important to focus on the long term, not the short term. So if you look from that perspective, um, we review this estimate on an annual basis. And that's the reason we do that. And so, unless there's a huge, significant market event or impacting the long term output of economy, we're gonna then reduce, take a look at it. But right now, I think we're still in the short term. How do I say it? It's a negotiation game, if I can use that term. I think a lot of things people are still wait and see what's going to happen. There might be an outcome come out where, everybody come together and negotiate with Trump, and even Trump himself is, even with China there, he's sort of inviting them to the table, right? Say, okay, if you come to the table, if you let if you let go TikTok, maybe I'll lower the tariffs, right? So there's so many different scenarios could come out. So in the short term, it seems a lot of uncertainty, but if you take a more longer term view, global trade helps everybody, and that's pretty clear. Now, there may be certain segment of the population or industry got hurt that needs some adjustment, but overall, the global trade is I don't think that's reversible. People are still enjoying the collective or comparative advantage different countries have. The classic example is Switzerland do a better job at manufacturing watches. Italy do a better job of manufacture spaghettis and so forth. But collectively they trade. Each one can enjoy the better watches and also enjoy better Italian foods. I mean, that's the spirit. So I think that will continue to happen. Now, exactly how tariffs are going to impact things, I think we'll have to see. Now, if everybody put up 100% tariff, then that's going to be a terrible outcome. That will certainly lower the GDP globally. And from that perspective, I think we'll need to relook at what the Ibbotson Chen historical model has been producing. But barring from that, I really don't think short term we need to, at least at this point, we need to go back and tweak things significantly. Particularly, we already have a mechanism that we look at these numbers on an annual basis, anyways.
Okay, Dr. Peng, you're making me hungry talking about spaghettis and all.
Sorry about that.
No worries at all. We are about to come to the end, but I just got one surprise question for you. How are you yourself investing during this climate? Like, did you buy the dip and things like that?
No, I did not. I basically take a look at my portfolio and didn't make much tweaks. I try to make sure, like I said, on the first brush, I did a look through and say, okay, how much equities I'm tied up to the U.S. market, how much I'm tied to the Chinese market, and various other market. Am I still well diversified? Am I too concentrated in the US or too concentrated in China? No. Okay, good. Move on. Okay, look at equity, fixed income. Is that okay? Okay, that's by and large okay. Okay, look at fixed income within fixed income, different currency exposures. Okay, not too heavy on one side or the other. So I really didn't make too much of a change. Like I said, I watch these things very closely. Certainly if there's something that would be big enough, let's say, the 100% tariff across the board, not just China and US, but across the board will be implemented and everybody accept that. I think we'll, potentially need to take a stronger look and see, what how we may want to adjust. And one of the things maybe, also depends on your risk-taking ability, right? We didn't talk about that. So not only you have to look at market, look at the wealth picture, but your risk-taking ability and preference. And for me, I went through, the market. I went through my wealth picture. I went through my portfolio. I went through my risk taking. Basically means, okay, am I losing my job, right? Am I cash flow? Am I still okay? Is my cash flow being impacted? Unlike my Christmas light manufacturing relatives, my cash flow wasn't impacted. For them, it's a big impact, so they have to adjust how they respond. For me, it wasn't, so I just pretty much kept going.
Yeah, I think that's a good thing you mentioned about risk as well. We didn't manage to discuss that further, but of course we can continue talking more about that. Knowing your own risk tolerance is it's so important. So especially during the current climate, how much risk we're willing to take, especially in an actual crisis situation compared to
Exactly.
paperwork. Yeah.
Yeah, so I use maybe a more extreme example. My Christmas light manufacturing relative, during this period, I mean, his business gotten hurt. His income now is a bit uncertainty. So for him, very naturally, he need to build in more flexibility. Like I said, he have to review the rest of his portfolio and say, okay, am I too aggressive? Because my business, my income's already exposed to this particular dimensional risk because about half of his product get exported to the US. So he has to, my recommendation to him is that, okay, take a look at your portfolio, and maybe you want to de-risk a little bit because of your business and so forth. And that's likely going to be how it impact him. And for some others, maybe it's better business, right? If you're a Christmas lights manufacturer in the U.S. or in Mexico, which you may see your business boom, and you may have a different response. So each person is a bit different, but for vast majority, at least people I talk to, I talk to doctors, professionals, business owners. This is not going to be a huge event unless, like I said, like my relative, unfortunately, 50% of the business is exporting to the U.S. and he's going to look at significantly adjusting how his business look and potentially are also how his portfolio would look like.
Yep. So, I mean, if I may summarize what you mentioned about, I mean, what you mentioned about how you invest yourself, I think it's a very good summary. Just basically look at your portfolio, and is it still making sense? And if it makes sense, just keep it. You don't have to, do things. I mean, staying the course, I think, is one of the best things investors can do at during this point in time. And there have been
Yeah,
so many studies, even the Morningstar study of the investor gap as well. Probably we can touch a bit about that investor gap.
yeah. So, you summarize well. So, from an investor perspective, when anything happen, take a look at the market, what's really causing it, and then assess, is your portfolio okay? From a diversification perspective, is your wealth picture okay? Is your income cash flow okay? Or at least anything significant changes? If there are no significant changes, don't do too much because the number one mistake we have find investor make is to make these, quote unquote, seemingly market timing calls and then get caught, in the wrong direction, and lose a lot of real value over time. Now, if you were one of the unfortunate ones that got impacted, then make some sensible adjustment over time. I think that's justified. But for the vast majority, like I said, most people, these are not, hugely significant event, particularly looking from long term. And I would quote, what Warren Buffett also says that anytime the market drop, actually, you're essentially buying things on the cheap, because these business and collectively the economy overall, it has been very resilient. And look at just in the past 15, 20 years what we have experienced. The first internet bubble, people tend to forget. Nasdaq index dropped from 5,000 to 1,500, that's a 80, close to 80% drop. Um, 2008 real estate, financial crisis, GFC, huge impactful. COVID, right? We don't even know whether we can get out of our apartment or not, right? So all of these things, the people, the business, and the economy and down to the market are very resilient. And so I think people shouldn't lose hope of that. And this tariff thing, it right now is a big uncertainty hanging over our head. We don't know what's going to turn out. And let's not worry too much about those, but worry about what we can see. What are some of the things impacting our portfolio, impacting our wealth, our income, making necessary adjustment. But don't try to make any snap decisions just because the market went up or down.
Yep, thank you so much for your wisdom, Dr. Peng. I mean, I'm sure our clients learn a lot, just like I've got a lot of takeaways as well. Clients, if you would like to speak to our client advisors to journey through these turbulent times, we are here to speak to you and we are here for you.
Yes, that would be the last thing I would add, that, oftentimes this is scary when things happen, and you really need a trusted hand or trusted voice. And Provident is a fee-only advisor, only working for the clients. And feel free to reach out to the advisors. And the advisor oftentimes also knows, your situation pretty well, right? The client situation, and can help you navigate through this.
Yeah, that's right. I mean, clients don't have to journey this alone. I mean, we have an advisor for you to journey this together with you, and anything you can just sound out to us, and even small decisions you want to make, like, should I purchase a property now? Should I refinance my loan or things like that? We can point you to the right directions if you don't have the answers. So you're not alone. We are doing it together with you. You also can learn more by reading our investment ebook that we have. It's called A More Reliable Way to Get Enough Investment Returns. That link will also be in the description section below, so you can download that and to learn more as well. So thank you so much, Dr. Peng, for doing this special client event with us.
Well, thank you, Sudan, and hope to see you again soon. Take care.
Thank you.
Bye bye.
Bye bye.